I made the guess that there's only one person. So one person company. Now, this company can be as big as you want. And how many hours a week do you expect to spend on it? Choose a number. I spend a couple hours a day. Took Sunday off. That's 12 hours.
20 a week.
What?
20 a week.
20 a week? Give me a number, guys.
20 is good. 20.
You guys are being tough. Okay. So, now.
That's too much work for $141 a month.
This is a plan. I mean, this is the whole thing. But you haven't seen how bad this is going to look yet.
We're going to ramp up later.
To $200
okay.
a month.
Typically, I think these are my numbers. You can change them. I think you spend about 5% of your time doing management stuff in the course of a year. So you don't make the strategic decisions a lot. You come back, we're going to kind of look at those quarterly. That's not a big portion of your time. I spend most of my time personally looking at new strategies and other ways to do that in the research and development area. In the manufacturing operations, most of my time is spent on education. I spend about 25% of my time there. And I brace that so I get about 20% for me is doing that. And then I spend that leaves you about 10% time in the finance and controls. That's pretty much, data in the spreadsheet rolls out pretty fast. So if that was the case, what you're basically planning on spending here in terms of a budget, and you got to think, do you have the time to do this? The reason we're doing this is think about, because your most important characteristic, do you have the time to do what you're trying to do? And if you can't make the time to do this, and understand where you're spending your time, you're not going to spend it. The pieces won't work. One of the very first mistakes I ever made is I tried way too much on 2 hours a week or so, expecting magic to work, and it just didn't work. My expectations were way off. I didn't allocate enough time, and I made lots of mistakes. So it's basically, for this business, you're spending 80 hours a month. That's 2 full work weeks in the normal marketplace, and that's nearly 1,000 hours a year over time. Let's talk about compensation. I would pose you, and I just made up numbers, guys. But the way a lot of hedge funds and things charge is they basically pay us, charge you 2% for some percentage for the amount of capital they're managing. We'll talk about that on the initial. And then they take a percentage of the profit they make you. So I've heard numbers like 2 and 20 as being fairly good. They're supposed to be very successful. So we could do that. And I think that you got to pay yourself a wage. Now, $5 is way below minimum wage. But you can decide if you're worth that. You got to figure out what your time is worth. The reason I think you want to put some number like this in, you ought to be thinking about, if you can't pay yourself these kinds of numbers, maybe you ought to be working at McDonald's instead of trying to trade. I mean, the cost per time. So these numbers are all focused by some of the time you created. So essentially, based on what we've suggested, on a full year basis, that our compensation, so on $30,000, we're suggesting we pay ourselves, or we expect to be able to pay ourselves, a little over about $6,000. That's about Well, 10% is 3,000, so it's about 15%. Or some number, I mean, we don't need another number, but is that a reasonable wage for your labor? Is that too high or too low? Too low? Well, let's see if you have a viable business before we go change things. So what we're doing here is we're just getting a feeling for what you think. So the next thing to look at is, you don't think you are going to pay that much?
Well, you're not making that much. If you're only making 141 a month.
Well, let's see how much you make. Okay. For all of you that can read this really well. Okay. Let me see how. I think we have to go to do this. Okay. What I'd like to look at very first, is that readable now? A little better?
Yeah.
Okay. Let's just look at the inflow of how the cash works. If we were to make these kinds of assumptions, and remember launching, so the first month we can't close any trades. We start with capital, there's no other piece. So we begin to, the next month we're closing trade. So every month we close the trade to the ramp up. So we create an inflow of cash every month based on our trading. We have trades, we have open trades, which is inventory where we spend money out of our capitalization. And we spent a little money on education right up front, about a quarter of our money. Spend a little bit of, we'll spend our equipment allocation, about 3/4 of that for our equipment. Over here in halfway through the year, we found we needed a dingle whip swap switch. For whatever reason, we had to have that. So we put a little money in there. So it comes out of it. We're spending some money on our research and development based on the money that we chose to put into there. We're paying ourselves just the minimum wage. At the end of the year, right here in December, we pay ourselves because the bonus that we got for the profit that we created. And so here's what really happened. With the assumption set that you made, the cash flow is negative. You start out with $30,000, and at the end of January you have money. But it doesn't last long. Well, every month you're bleeding money. Now, notice as the year goes on, there we ramped in that we're getting towards, over here in December, we're actually approaching profitability. So as we begin to move further on in time, eventually this could become profitable. But we have to pay ourselves a bonus here. So the other place that you look at is you want to look at the balance sheet. So we start with cash on hand, which at the year end of 2030, we actually have $30,000. So we really start at the end of January, we end up with the amount of cash that we had is this. And the cash keeps moving down. So here's important. Our inventory are the trades that we have on. They go at cost. And then our equipment has value. So what's happening to our total set of assets is at the end of the year, we still have $21,000. So we're not out of business. Although we had a negative cash flow with this plan, you're still in business. And if I get the projections on this, extrapolating out for the future years, we still basically have a negative cash flow every year under the set of assumptions that we chose. So, however, we're not out of cash, but we're down to $5,000. This is a going out of business scenario. What I didn't roll into this plan, the spreadsheet is not sophisticated enough to keep reducing the trade size based on the percentage every year. I just didn't want to build that sophisticated spreadsheet to start with. We can do that over time. But what the exercise tells us is that the set of assumptions that we created through all the pain that we just had that wonderful experience said that we're in a going out of business scenario. What we did is we broke out for our big expense areas that look like this, and here is our trading capital. But if we look down, and I'm only plotting, here is the first 12 months. Here is cash. This is negative cash flow. Now it's getting smaller than a little jump here. But notice, this is what we call owner's equity. Owner's equity is the amount of the business that you own. So while that is on a going down scenario, says this is not a good business plan under the set of assumptions that we came up with. That puts us to the point that says, what do you want to do about it? Because this is the iterative process. You made a guess, not unreasonable guesses. They fit the set of assumptions that you're trying to work on, but we're not growing this by 25%. So we're not meeting our objection, plus we're going out of business. What we'd like to do, it's okay to have the negative cash flow, but you'd like to see this equity line at least staying solid or going up. So here's where building the plan tells you that set of assumptions, if you started out without doing this little piece of work, says your guesses aren't good. We haven't even gotten to the point of can you actually do that? That's the next step. So let's go back. And what do you change?
We need some winning trades. Absolutely.
I guess I would disagree with you where you say our guesses are not good. Rather, I would look at it and say perhaps starting with $30,000 is insufficient to make this a viable business.
Okay.
Well, I don't think.
No, hold on.
It won't matter.
Let's assume that you're right, Joe, which you probably could be, but I'm going to guess not. What do you want to change the number to?
100,000.
Okay, that means that you've got to have $100,000 of capital before you can start your business, is what we're saying. You want to keep all the same assumptions?
Yeah, let's keep them the same.
The assumptions
No.
aren't bad. It's a business.
No.
Okay.
Joe's premise was that we didn't have enough money to start with. Our first year is still the same.
No, but your cost would be lower because you're not going to spend, I mean, if you can trade.
Okay.
Spending.
But I mean, it's not just adding money. I mean, your point is it's not just adding money. So let's go back. And I would say you go back to the 30 because just adding money doesn't fix your problem. So what else would you change?
2% R&D.
Okay.
You can reduce all of those.
Okay, I mean, this is the iterative process. So quickly, What do you want to reduce? You tell me. You want that too? What are the numbers?
3%.
3?
You do need a good computer system and it's reliable.
So,
Leave that.
leave that, okay.
Salary.
Salary? You're still gonna, now see, we allocated money here for salary, but we were hoping to be able to pay that out of the real pieces. But even if we weren't making money, we were gonna pay ourselves a little bit, pay for the time. Or write a promissory note to pay the bill. We can always do that. So what are you trying to change here? So you reduce the contingency?
Yeah. One.
No, leave that.
Wouldn't it be better to put more in trading?
Well, trading should automatically upgrade. Oh, I thought that was, oh, I forgot the equation. The reason that's not yellow is because when I built the spreadsheet, that was supposed to be the equation. Okay, so I will change that too.
100 minus
Well, let's, just we'll do it quick and dirty. Otherwise it takes me longer to, we don't want to burn the time to fix the equation. I'll fix the equation after hours. Okay, so now we change some of our expense. Now, do you want to change the amount of time you're putting in? Probably can't do that. You want to change the way you pay yourself.
Yep.
Okay, what do you want to change?
Is there proportional reward for R&D versus salary? If you put more money into R&D, do you get more
I
income?
can't quite hear you.
If you put more into R&D, a higher percentage into R&D, do you get a proportional boost in income out of that? Or do you put
Yeah,
more into salary, which would be your
Okay.
county and.
where the compensation comes from. I mean, the salary is just kind of a placeholder there.
It generates the report and risk management, right?
It's kind of, it's really a placeholder so that you can pay yourself when you don't have profits. But you're really paying yourself is going to be based on this. We don't have enough money to pay ourselves the $5,000 into minimum wage.
We have a budget of 1,500.
That's right. So
Those bottom numbers should be 1,500 or less.
no, because you can make profit. We just allocate some money. If you want to put zero money in for salary, that's fine. You're still going to pay salary. The only thing you're going to change up here, if you say, okay, I'm not going to allocate any money for salary here, that now allows me to make that
83.
same number I got. Okay, so we can do that. It doesn't change these numbers. These numbers are based on performance. They're based on a minimum amount of time you put in and your performance.
Let's reduce the time to 15 hours a week.
15,
Yeah,
you're going to be more effective.
right.
That's good for me. You want to change the you want to pay yourself less? On performance?
Yeah, 1% of the.
1% of the initial capital under management.
1 and 10.
What, 10?
1 and 10 instead of 2 and 20.
Okay. I'm going to tell you that it's probably not going to fix the problem, but those are all good choices. So we'll just walk to the bottom line. We've got,
It doesn't matter.
okay, I can tell you what the answer is.
That's lower.
Well, you're dying slower, but, and we can go look at the cash flow numbers. I mean, these all flow from the pieces. And you see, the numbers are different. They are different because we changed pieces. But the bulk of the thing is, we're not making enough money. The real bottom line is, and you had it right the first time, but I certainly wasn't going to give it to you that easy.
That's okay.
That would have, the lesson would have been lost. Is we need to go back and look at the amount of funding and the risk here in order to be able to do that. So I think you got to go back and revisit what you're wanting to do in the trading. I think all the points are good. John, did you have one?
Yeah, wouldn't it be more logical to figure out what you want to receive at the end of the year and do it on a sort of discounted cash flow basis, go back, what resources do I need in order to make that happen?
Well, that's effectively what you're doing here. I mean, it's not exactly the same plan, but we were trying to decide what kind of trading strategies do we need in order to come up with a number that's reasonable at the end of the year. So
We're spending.
I want to pause here. I'm happy to spend more time on this. We're not going to get to where we wanted to get to tonight because it's 8:35, and so we're not going to get to a trade because we can't get, we can't really talk about a trade, so we can't really launch a trade tonight. So we need to talk about a couple of other things before we come back to this. For the rest of the meeting, we need to do more work on this plan. So where I want to go back is to the formal presentation, the other formal presentation.